Whether you're a seasoned investor looking to buy your newest stock or an amateur looking to dabble in investment and trading, it's always helpful to have a guide. Here are top 6 stocks to buy and hold forever. Apple. Now, this is an obvious enough guess, with Apple's current net cash of $79 billion speaking for itself, with the price consistently increasing. When buying stock to hold forever, it's important to note the stock's past recessions and growths. Apple's iPhone is probably one of the most popular products of all time, making it one of the best stocks to invest in, financially speaking. The popularity of the iPhone grows with every new product the company releases, and the kind of brand loyalty the company manages to arouse in users is almost cult-like. The Apple ecosystem makes users crowd towards any new product the company launches, buying AirPods, Macs, iPads, Apple TVs, etc., just to have their devices work together seamlessly. The security one feels investing in Apple is incomparable. From a financial standpoint, an Apple investor is offered great long-term advantages considering its reliability. In August of 2018, Apple became the first company from the United States to have had a market capitalization of over $1 trillion. Not only that, but as of September 30th, 2020, Apple currently possesses the largest holding in the Berkshire Hathaway portfolio, with the value estimated to be around $117 billion. Statistics are on Apple's side here. If you talk about how the company held 40% share of the United States smartphone market as of late 2020 with its resilient iPhones. More than that, it possessed a 29.2% market share in the United States tablet industry, leading the charge. As of November 12, 2020, Apple also paid a quarterly dividend of 20.5 cents as well. Alphabet. Sometimes when you buy stock you know you'd want to hold forever, you don't look for the marketability of the stock or how well it's performed in the past decade. What you do is, instead, buy the stock that's part of an institution you know is built to last for a long time. Something that constantly evolves and cares about the needs of its consumers. Alphabet, or more commonly known as Google, is one of these detrimental, ingrained kinds of stock. If you're looking for BOG, a kind of mega cap stock to invest in right now, look no further than Alphabet, the parent company to Google, amongst other things. As a result of Alphabet owning Google, they also own YouTube. So, you could conclude that the company runs our entire search engine and content universe. As of right now, Alphabet's balance sheet consists of $132 billion in cash equivalents and only $14 billion in debt. The kick is that because Alphabet owns Google and YouTube, they also own all subsidiaries of the companies itself, like Google Maps, Drive, Mail, etc. Not only that, the stock has some leads in driverless technology, and also a part of the top-tier quantum computing research. They are a continuously growing stock as well. Obviously enough, but in 2014, a split between directors Sergey Brin and Larry Page's control of the company resulted in 2 classes of different publicly traded Alphabet shares. In Class C shares, also known as GOOG, the shareholders possess no voting rights. Whilst with each Class A share, or the GOOGL share, shareholders are allowed 1 vote per share. Of course, there are privately held Class B shares that confer more votes, 10 per share, but those mostly belong to company founders and executives. Microsoft. Another great stock to buy and hold forever, is Microsoft. In the first half of 2021, the company's revenue shot up 31% from last year in cloud-based services. In 2019, Microsoft became the 3rd company to possess a market cap of $1 trillion. As such, Bill Gates is one of the richest men in the world at the moment. Due to the direction of the new chief executive officer, Satya Nadella, Microsoft has begun relying less on the Office software suite side of business and the Windows operating system to generate revenue. The services that to some are indispensable are now a huge part of what's generating revenue for Microsoft. At the moment, Microsoft has paid a quarterly dividend since the year 2004. And in 2020, they paid a quarterly dividend of 51 cents per share. For reference, in 2021, the company has paid a dividend of 56 cents per share, a larger amount than the past year. Disney. As one of the markets that constantly evolves but never truly changes its base functions, Disney is one of the most reliable stocks to invest into and hold forever. As an institution that never collapses, even at the verge of bankruptcy, Disney has proven itself worthy of buying into. No other company has been able to blend the world of old age media and modern new day media quite like Disney. It also owns 2 of the top 4 streaming services in Disney Plus and Hulu, and arguably has the most vastly viewed content library put together. So they've essentially dominated all states of media. First, a movie they create may be released in theaters, then to their own streaming service, then inspire theme park activities and rides, and eventually even get a reboot. So the franchise has essentially just found a way to be immortal. And it would be an understatement to call their theme park business booming. And you aren't just getting Disney when you buy stock in Disney. You get studios like Marvel, Pixar, and famous franchises and companies Disney has swallowed up over the years as a conglomerate. And if the stock is ever in recession, you can almost always guarantee that it will rise again. For example, in the times of COVID-19 pandemic's peak, most businesses stumbled financially and economically. And sure, Disney couldn't do wide releases anymore without their theaters or offer theme park rides. But even that didn't leave a permanent enough dent in the empire's fundamental business model. The company still managed and still manages to produce, release, and monetize that content globally with ease. Adobe. Adobe is a software one doesn't think a lot about when first learning to break into the corporate world. But numbers have proven just how indispensable these tools are to most businesses. 8 years ago, Adobe as a company was criticized a lot for transforming all of its desktop software into subscription-based cloud services. The main critique was that the service couldn't be as in demand, and as such, face away without making a large impact, and its margins would be squeezed. But alas, Adobe's bold decision turned out to be astronomically good for the company, as it turned Adobe into a high-growth stock once again. Now, you may be wondering just how high a stock? Well, in the past 15 years, Adobe has managed to deliver on even higher gains than Accenture or Alphabet, with a 1,790% stock rise. Apps that were creation-based, like Photoshop, Illustrator, After Effects, and Premiere Pro, were clearly indispensable tools for multiple industries and businesses. And with no competitor even coming close to offering the range of services that Adobe does, it's managed to stay relevant all these years, serving these services as cloud-based locked-in customers with annual contracts, and in turn benefited them with consistent newer updates to the software. In the last 10 years, Adobe's annual revenue has more than tripled from $3.8 billion to $12.9 billion. And its net income has soared almost 7 times the original, from $775 million to $5.3 billion. For long-term reasons, Adobe remains a solid purchase due to its solid ecosystems that allow multiple of its softwares to work cohesively and drawing in more users for each of them. Another reason is their flagship creative products. No one can deny that Adobe stands as one of the most valued softwares to date, and that in the past, Adobe has remained resistant to economic downturns. Visa. We've talked about conglomerates in every field at this point, so why not talk about monetary conglomerates as well? Visa, one of the world's largest credit card companies, is apparently a great stock to invest in. The credit card company provides services online, over the phone, or even in person to its consumers looking to facilitate payments. More than half of the company's net revenue, 55% to be exact, came from outside of the United States this last year. The company keeps showing growth, with 11.5% revenue growth in 2019 to amount to $23 billion. In the last 7 years, the company's profit margin has been above 60%. This means there's reliability, and the company has backup plans in place even if the growth level drops. Without the company's involvement, Visa is a cult favorite due to its durability. Companies like PayPal, Apple, and Square have all launched their quick payment methods, but even they rely on Visa to make their payments work. One can't separate direct payments to individuals without a Visa. The biggest added advantage that adds to their reliability is the network of users they've managed to accumulate. Almost everyone owns a Visa card or wants to own one. Of course, you could choose to invest in MasterCard, Visa's rival, instead. But ironically enough, Visa is cheaper to buy, resting at a lower price to price-earnings multiple. If you enjoyed watching the video, be sure to leave a like and leave a comment down below. Subscribe to the channel and turn on notifications to get notified every time we post a new video.